Hello, everyone. Welcome, welcome. Welcome to the U.S. Bank team meeting. I didn't mean that. Welcome to MPC, the Marla Peter show. Oh, no, not yet either. No, really, I'm so excited to see family, friends. I mean, this has been a while. It's good seeing everyone. It's really been amazing. Thanks, Marla. Looking forward to the day. And really, it's what we like to do, what we like to talk about. Fintechs, how do we work together? And it's really exciting. So if you haven't got the theme, it's about build, connect, and innovate. That's what we're going to be talking about today. Build, connect, innovate. If I don't say that like 6 times, I'm going to get in trouble by US Bank. So build, connect, innovate, that's 3. So let's make sure I say it 3 more times before I finish. And so we have a really good program today. We're going to start off with Ken Gruber and Madison Danini, and they're going to talk to us about how they're working with partnerships and how they are enabling payments through the ecosystem, enabling faster payments connectivity. Because it's really about connectivity, and we're going to talk a few things of why it's important and meeting customers where they are in the digital journey. And I think it's really important, why we're doing this. So you'll hear terms like FBO, so for benefit of. That's the way the world is working. As we move from a card world to an account world, we're going to use structures called FBO, for benefit of. Most of your payments people, you guys get that. And then at the end of the day, we're going to talk about how we're using a payment facilitator with Elevon and Steve Velasquez. And he's going to talk about how they use, for Elevon here across the street, how they do that. And then in the middle of the day, Brian Schneider is going to talk about what we're doing with partnerships around Kyriba, around Microsoft, and how we embed payments and really and bottom line technology. So it's an exciting day, and really it's really simple. We're meeting people on their digital journey, enabling payments, meeting them where they are, and trying to build, connect, and innovate. Is that 5? Oh, 1 more? 4? Build, connect, and innovate. So with that, let me bring up Ken Gruber and Madison Danini.
We'll see if this works. Does this work? Okay, we're good. All right. Good morning, everyone. Wow, the lights are bright this morning. We are up and early on a Monday morning. It's good to be here. It's good to see everyone in person. We're happy to be here. I'm going to grab the clicker so we can move through our presentation today. Not that we have too much. We're going to ask some participation from the audience, some questions and stuff. So this is a small group, and that's the good part about being in a small group, that we get to have a conversation. So if you have a question or a comment, we might ask you for an example. Please raise your hand, stand up. We want this to be interactive. So let's see if I can work. We've gone from this to this. Who remembers the days where you wrote a check in the grocery store? So my dad, up until maybe 2 years ago, still wrote a check in the grocery store. And I was like, you are clogging up the lines. You could use your debit card, Dad. It's the same thing. And the good news for the grocery shoppers in Dayton, Ohio, he has switched over his debit card, and he is no longer holding up the lines. But it used to get kind of embarrassing at some point. So, I already broke it. That's okay. And so it's nice that we've really moved away from paper, and obviously COVID has really done that as well for us. And it's moved away from paper into mobile, into digital payments. And that's what we're really here to talk about today, is the new payments ecosystem. So checks, cash are always going to be a part of everything, but really we're here to talk about what those digital payments are.
Good, really good story, Madison. So let's jump into what's driving the new payments ecosystem. And Madison talked a little bit about checks. I think back through my career, I think it was 2004 when Check 21 came out. And I was all excited because I thought this meant checks are going away, and that's what everyone said, right? So what had actually happened is now what we learned is checks haven't gone away. We still just need to meet clients, where they are, when and where they want to be met, how they want to be met, and that hasn't changed. And I think about everyone in this room, just think about your platforms, right? So people that have different platforms, they built something to solve a problem. A lot of times they're thinking about 24/7 connectivity. So if you look at the screen, we talk about real time. Are they thinking about real-time payments, 24/7 connectivity with those payment processes that they have today, or is that something they need to work towards? I don't think I'd stop there. I'd say like the one major thing we have to say in every presentation, we have to give our obligatory mention to COVID, because it wouldn't be a different payment system without that. I'd go back to when I met. Well, it got loud, good. So I'll go back to when I initially met with one of my clients. I remember being in Disney in Orlando, and it was, I get back late on a Friday. They shut down Disney on Saturday, Sunday that week. One of my clients called me and she said, you know what, like we've been talking about this process for years, and I always said it would take an act of God to change this. And she said, I think COVID is that act of God. So that really did drive change, and we see that in all our client bases. And so we see people trying to digitize what they do. And if you think about people that were processing checks, today now they're going back and they're outsourcing those so that people don't have to touch them, or they're moving them to more digital rails. So again, that's a lot of change in the marketplace. You hear the word frictionless, and those are all terms that I think are pretty common. We all think about the customer experience.
Yeah, and it's not just COVID. I mean, obviously that was a huge component of it, but it's the consumer demands, right? All the consumers now want to be able to go to the grocery store and tap their phone to pay and contactless and make it easy because it's frictionless. It's easier to do. And there's an interesting stat that by, I think, 2029, 72% of the workforce is going to be made up of Generation Z and millennials. So you can think of all the expectations they've brought into the consumer world. Those are now coming into the office. And I think that that's really, really important. For a while in payments, we always delineated what are the consumer trends and what are the B2B trends, and really they are now the same, and the expectations are the same in the office as they are in that grocery store line. So I think we have a really good example to showcase before we dig into what's made up of the payments ecosystem. I like to tell a little bit of a story and talk about a real example. So Ken, why don't you tell us about that?
Awesome. So I used to always ask who's bought or sold something online. That's definitely changed the last few years. But maybe who's bought or sold a car online here? Anybody? It's amazing. So some people are doing that today. That's not something we would have heard years ago. So this is a really cool story that we're happy to tell. If you think about that experience, right? You're a large auto dealer, and you used to be able to only reach your certain small market. Now you can reach the whole world basically with your sales. And then you think about what they're doing. Everything's a digital experience. So you're on the online platform. You're getting the data analytics. You're comparing your competitor pricing. You're able to see if you're in the market, and get really real-time data. See how many clicks you had on your site, how many people are actually looking at that car that you have out there, and you can get all the way to that functionality. So you do all of that, and then what we were finding is at the end of it, you sell your car, and you're getting a check in the mail. And that just didn't feel right. So what we found was, I think a lot of banks have this. You'll have a consultant kind of come in. We talk about your processes. And the difference that we've found that's been really advantageous, we'll actually talk to you about your processes. And then with this example, with Driveway, we actually brought them into our Agile Studio. So we brought them in, really integrated what they do into what we can provide, and now they can send a real-time payment into the network. So think about what that does for them. It gives them first market mover advantage. And so if you're a dealer and all of a sudden you get paid right away versus waiting a while, it might not be the only thing that's a factor in your process, but it's one of those things that's a factor in your process. So again, it's just a really good story about how we integrated with the client, co-created a solution, bring them into our Agile Studios.
Yeah, it's a good example of the frictionless. I mean, you can get to that digital car buying experience, and then you're still getting a check in the mail, and that one piece of the experience has now turned it from a great digital experience to something that's kind of like a little lame, because you're like, oh, now I have to wait 3, 4, 2 weeks potentially. I mean, I don't even check my mail every day, honestly. Maybe I would if there was a check in there. But I think it's just a good attest to how it's really moving the entire experience to a digital and frictionless way. So let's dig into what this new payments ecosystem is really made up of. So our session is the build part of it. So we're going to go through kind of the foundational elements of it. And we just started to talk about some of the faster payments. And there's several different faster payments out there. We talked about real-time payments, RTP. I feel a little bit like Peter up here, like I have to mention RTP probably 6 times. So we'll continue to do that. But
I would jump in on that too, Madison.
Yeah.
Think about like real-time payments. Like it's been around for a while. I feel like it's an older. I almost feel like it's an older solution in the ecosystem.
from
but
2017.
Yeah, I do. In today's world, it really does. We're the first bank to process one of those, so we've been thinking about it for a while. I always think of like around the holidays, you go to order a package from Amazon, and I know they've been thinking about it, and I feel really good that package is going to arrive. And so that's something that when I talk to companies in the market, I always say, like, think about those new payment rails. You don't have to do it all right away at once, but you should be thinking about it and piloting it, right? If you're going to start to think about 7 days a week processing, can you do that? Is it real time? Is it giving your customers the experience they really want to have? So again, I like that Amazon example of thinking about it. And then, there's a bunch of other solutions you can add onto there, like account validation and escheatment, but really, and even like API calls. So again, the more you think about that, I think the better you get with those type of solutions.
Yeah, absolutely. And then Zelle is also really popular. Who's used Zelle for a peer-to-peer payment? Almost everyone, which is a really good sign. I think we're at the right conference then, so. All right, good.
We're going to test it out on my number now.
Yeah. Yeah, everyone, Ken is going to Zelle you each $5. No, I'm just kidding. But Zelle is great, and you all know that it's an alias-based network. So it's great for those business-to-consumer payments. So you think about insurance claims, a student refund, and you don't have to collect the bank account information. And to me, that is one of the biggest pluses there is on Zelle. And in addition, that people are already using it. So you can actually see who's in the network if they're able to accept it. I mean, think about if you're an insurance provider and you just had a disaster happen to your house. You need a hotel, you need food, and you have money in your bank account immediately because the insurance company already had your email or phone number.
And we had a scenario like that where we had a large carrier in Florida a few years ago, and you hear some pretty horrible stories from their claims people, their agents, and talking to their treasury and finance teams. And people don't always have, they don't know their routing number, they don't know their bank account number, their house might not even be there. So really, like, really hard time in their lives. And if you can, after that first notice of loss, which might be their home, if you can provide them a payment to their phone, they can buy essential goods, right? So they can go get water, they can go get a hotel room, all those things that really make a difference in their life. So again, that's really a really good example of just really helping people where they are when they need it most.
Yeah, absolutely. And then you probably have started to hear about FedNow, and that's coming out in 2023. So it's not yet available, but it is coming, and so we had to mention it for sure that it is going to be a faster payments rail that's 24/7. And then finally, virtual card is another really popular option we're seeing as a faster payment and really a secure way to do it since it's that one-time 16-digit card as well. So moving on to another part of the new payments ecosystem, new account structures. And Peter mentioned it a little bit about FBO, but I'll let Ken talk more about what that is and why it's so important.
Yeah, it's interesting. So as banks, like we've always had FBO programs, right, for benefit of accounts. And what I've found over the years is just everyone calls things similarly at times. So FBO to one person might mean something to someone else. The way I look at it is if you're a company and you don't want to be in the payment flows, there's something called a bank-owned for benefit of account where the tax ID is in the bank's name. And to me, that's a critical point in that discussion. And I'll even say it varies by payment type, what that means. It varies by bank. And so what you want to do is find someone who's working through those, has some experience in the marketplace, has recent legal opinions, and really understands where it is today and where it's going to be in the future. We found that some people who have FBO accounts set up in the past, maybe those aren't in compliance with today's regulations or where we think it's going to be in the future. So we're really trying to stay ahead of that curve, know what it's going to be, and then work through those to keep our clients safe and secure. And then the other thing on this slide is the virtual accounts. Again, that means different things to different people. So I think we have a panel up here with, I think, Modern Treasury or someone speaking next. They could probably talk about, like, from a technology company, what that means. From a bank standpoint, I look at it as us blending all these one of our strengths is we have these great systems and processes. One of our weaknesses is we have all these systems and processes. So we use something called Hogan. Every bank uses it, and those have been around for over 30 years. Virtual accounts gives us the ability to be a little more nimble, a little more agile in how we set up accounts, allow them to do things like DIY processing, and then what it also does is helps us with ledgering and reporting too. So you'll hear about virtual accounts. Really, you can get it's basically getting a routing account number just like you would with your normal account. So that's just a little bit about those topics.
Yeah, I always say that businesses are built on the best technology at that moment in time that they're built on, and then they have to work to continuously adopt new technology, and it's about layering. It's never going to be about ripping and replacing. Like I always say that, because as a bank, we're probably never going to rip and replace our core system, but how can we continue to innovate, use the new technology to be able to meet our customers really where they are? And then connectivity is a huge one. So we keep talking about this, and this is basically the glue that holds all of this payments ecosystem together. It's what holds partnerships together. It's what holds virtual accounts together. It's what holds that Zelle payment that you get for the insurance company. So APIs are a huge part of that, and have been around for a really long time. Honestly, I think they've been around since the 70s, but they've gotten some rebranding lately and really become the hot new topic again. So like I said, it's really the glue that's sticking everything together. The bank on our end has a developer portal that allows people to go and have a sandbox environment and test with it, and again, continuously implement and adopt the newest technology and make it easier to adopt the things like Zelle and RTP and virtual card by having an API that you can just plug in to the experience that you've built for your customers.
And I'll just add to that. I think everyone here is a lot of payment people here, so this isn't anything new to you, but what we see is some larger companies that have been around for a long time, they might have existing transmissions, and that's just what they're used to, so that's just what we set up. And then maybe they're moving to APIs for different reasons, so we start to gradually integrate those into their processes. So sometimes people come in and think API is the new shiny thing, we should just do that, or sometimes it doesn't make sense. Let's stick with your existing processes, let's get done what you're trying to accomplish, and then gradually migrate to those newer ways to connect. I think of it as like a bridge to the bank. How do you get across that bridge to connect to us back and forth?
Yeah, and the ERP connectors, right, being able to, if we're talking about a treasury function and where our customers want to transact out of, the ERP is becoming really their central spot, so being able to connect into that so they can transact makes a lot of sense. And then Ken mentioned the file transmission. It's a traditional connection way, but we still see a lot of clients doing it, and it works really well, and there's nothing wrong with that either. And I think the point is to create a menu of options for our clients to connect so they can build the experience they want to build. And so that's really, I think, the key point is that it's not just a one-way road anymore, that there's options out there. And finally, partnerships. Ken, you want to talk a little bit about partnerships?
Yeah, so to me, this is, again, I think we're just trying to find ways to do business in the market. Years ago, if you had told me some of the work that some of the bigger technology companies are doing, it's just amazing to see the innovation that's out there and how we can partner. So if you Google Walmart, you'll see they're the biggest check processor in the United States. Who would have thought that was the case years ago? And so just finding ways to partner with those companies is where our bank comes in. Eventually, no matter where the payment goes, you want someone that's in the back end, that's in a secure, regulated entity. And so we're off in the back office for a lot of those technology companies or innovative companies in the marketplace. There's different ways we partner. I know there's going to be a session on that later here today. But for us, for our team personally, I know we've put 4 or 5 partners into the bank as new products that we sell. So if we can't build it or develop it ourselves quick enough, or someone's got a better solution, sometimes we'll partner and put that into our bank. And then there's other times where we're helping them with just payments like we talked about earlier. So there's all different kind of opportunities there. And then from the client standpoint or from the fintech standpoint, they can say hey, we're partnering with US Bank, it's a top credit bank, and here's what we do together in the market, or whichever bank they partner with. So again, those are just some ways we see the partnership in the market. And I think there's sessions on all of this later, but hopefully this keys up high level all those thoughts on everything.
Yeah, that's what I was going to say. We're trying to lay the foundation this morning about all the conversations that are going to be happening over the next 2 days. And I would bet that every session in here is going to touch on one of these 4 pillars for the new payments ecosystem. Yeah.
Is FBO similar to your partnerships?
Is what similar? I'm sorry.
FBO similar to your partnerships? FBO structure, right?
The e-bill structure?
Oh.
Oh, FBO. Yeah, it is. So, like I said, there's different ways to partner, right? So, like, if you need a way to send payments into the ecosystem, sometimes you'll use a for benefit of account through our bank. So that's one way to do it. So there's that. And then there's maybe you're just connected to our APIs. And now your clients and our clients have that mutual connection. So that's another way to partner. And then there's like that formal, you know, you have a solution we can't build quick enough. We think it makes a lot of sense for us to partner. And maybe we sell your solution in the marketplace, or maybe we use it internally at the bank. So there's all those different ways that we can partner. And that's not, and again, that's an ever-evolving, changing landscape. And so like there's a bunch of sessions later today I'm excited about. There's a partnership one I think's next. So we'll really get into a lot of those details. But that's a really good question. Yeah, so FBO we see more as a way to put transactions into the marketplace, though, if that makes sense. But good question. Thanks.
Great, and then I think we'll wrap this up and kind of open it up for more discussion through this, but you know, what are the things to consider in this new payments ecosystem? And these are questions you have to ask. I mean, as you saw, there's a lot of different options on how to participate in the payments ecosystem, how to take advantage of it, and you know, we just put together some questions or thoughts that you know we normally the discussions we're having with our clients when we're talking about any of the things we talked about on the previous slide. You want to go through some of them?
Yeah, so I don't know if we want to ask the audience
Yeah.
if there's anything that you've seen as far as, you know, who's the right partner or what you've experienced working with some banks and what you're trying to do to fit in the ecosystem. We had a question about FBOs come up. So I guess for myself, I think of like which payment type's the best fit. You know, that real-time payment, Zelle, ACH. I think a lot of the stuff that we use today is out there.
Yeah.
But I don't know if you want to pick one of these and ask the audience any
Well,
questions.
I'm just curious, like what, I mean, there's fintechs in here, there's a wide range of people in here. What are you guys considering when you're trying to take advantage of the payments ecosystem? Anyone want to share? Yeah?
One of the things when we talk about which payment is the best fit, I think it feels like that almost is a little bit too much cart before the horse, because there's a lot of folks that are still in the land of checks, right? Millions of businesses, yet they're still looking for a way to move to something faster, something smarter. And so how are banks looking to transition those folks into a world of faster, smarter payments?
It's a really, really good question. It's been
Yeah.
going on, like I said, since I think 2004 when Check 21 came out. I thought checks were going to go away. Oh, sure. Sorry, the question was basically how are banks helping clients who are really check-based move to faster or newer payment methods? And so my answer would be, it's something we've been working towards for years, right? Like we make recommendations, but it has to be the right time for that client or that prospect to really implement that. And so we have tools like intelligent routing where you can just send us a payables file and we'll figure out how that should go. And we'll tell you, hey, these can be check, these can be ACH. We're also doing things to convert checks into virtual card payments. So we have some partnerships there that we formed where we can actually convert checks into virtual cards for clients. So there's a number of ways we do that, but your point's a really good one. It's those payment types aren't going to go away, right? We thought they were going to go away, but I think you need to be able to have those, then have the newer payment types as well.
And it's all about, I think it goes back to that question about who's the right partner, who's willing to partner with you to figure out what is that right payment type, what is the use case, proof of concept, proof of concept, proof of concept. Do not take anything that is critical to your business and just flip it all overnight, right? I'm a big believer in testing, trying out what makes sense for you, and who's the right partner, who's willing to test it out and figure that out with you, I think is really important.
There's a question back here.
Yeah.
Where do you see digital coins, especially stable coins that are not speculative, how do you see them fit into the ecosystem?
I could jump in.
Okay,
I don't think it would be a payments conference if someone didn't bring up cryptocurrency. But what I'd say is, as a bank, we look at those solutions, and again, we're a highly regulated industry, which everyone knows, right? So we, and Madison can talk a little bit about it, but we continue to monitor those. There's some of it that we've done within the bank on a really small scale, and so that's something that we continue to explore. But the hard part for us is, typically, we're regulated, and if you see what's going on in the marketplace, this is just my opinion, like I see the regulators starting to look at, okay, if someone stakes something, is that a place we can go in? And since they're staking coin now, maybe we can regulate that. Are we regulating the people processing it? So for us, we have to have the security for our clients, and that's the number one thing that we do. Make sure it's secure. But again, we continue to explore it. It just becomes challenging when you think of all the KYC, OFAC, and screening and all those different solutions that come into play to make sure that we're not doing something that the government wouldn't want us to do in the marketplace.
Well, the government itself now has the initiative of CBDC. There is a directive from President Biden to develop the digital dollar, which will be non-speculative. So all the worries that we have currently with the speculative coins are out of the question. And you have this, the great advantage in terms of social impact that you can hold money in your phone without having a bank account.
Yeah,
So I think it will be a big impact on the ecosystem.
It is, right? And I think there's different uses for everybody, is what I would say. And so as I think about the marketplace, if I'm are we able to protect our clients and consumers in that marketplace? And if we have the controls and we feel good about it, then we'll do it. But unless we feel 100%, not 100%, unless we feel really strongly that we're able to protect the consumers and the transactions, then we won't do that. Now, when you talk about the government getting in and some other big players, again, I think we need to see that develop. If you look at like FedNow that we had earlier, we've been talking about that for a while now, right? And still not quite there yet. And that could be, a certain time frame away. So that's how I see this marketplace evolving. As we get better controls in place, better systems and processes, then we'll feel better about continually adding that on as a solution. But I don't disagree with what you're saying. It's something that's out there. I think it needs to happen and evolve, and I think we'll continue to evolve the marketplace. What would you add that I missed? Anything?
No, I think you got it. Yeah, go ahead.
What innovation are you seeing we're getting really fast at taking a payment, not so much good at getting a payment back to people. It will still take 7 to 10 days for refunds to go back to bank accounts and stuff like that. What are we seeing on the bank side to improve the reverse of the rails?
Okay, so dispersing the payments then on that side. Okay, so the question was, I should repeat it, what are we doing on dispersing the payments and getting the refunds out quicker? I'm going to say a caveat, it depends what industry you're in, right? So I don't know what industry you're in, but if you're in healthcare, that complicates things. There's probably 3, 4, 5 departments involved in a patient refund. But if depending on what industry you're in, it depends. But I will say giving your end customer a choice on how they want to get paid is something we're seeing on our end that's really helping get it going out faster, because then you're not sending a check to someone who wants a Zelle, you're not Zelling someone who doesn't have an account, and then furthering that payment getting into their account. So giving those people a choice is really happening. And then this is kind of impact on processes. What is your process for figuring out who needs a refund, right? Like, how are you even figuring that out in the system? Who's responsible for it? A lot of times refunds float in between receivables and payables, and so figuring out who owns that function, how that's going, I think, again, focus on the right partner to figure out, can we fix both the process and what the payment type is going out?
Yeah, I would add, we track some of those as well in the bank, as you can imagine. So when we find trends or we see something, there's 2 different things that could be happening. Like, can we help our clients to mitigate that so that they're able to better manage those solutions? Some things like account validation, we've seen a big uptick in, we have less returns because we're validating accounts better, so they're hitting the right accounts. So that's one way. And then, like Madison said, I think it depends on the payment type, on how we manage and monitor those. And then, banks obviously talk, and we have some relationships there that we can leverage at times as well. So.
Good questions. Anyone else? I think we talked through a lot of these points on what to consider. I think, from my perspective, it's never going to be a one-size-fits-all for everyone. There's so many options out there. There's going to be more that are coming down the road. I mean, here we are today with 5 really great faster payment rails. What is it going to be like in 10 years from now? So to me, the point is figuring out who the right partner is. How can you make your processes flexible so you can continuously adopt new technology and these new payment rails so you can really keep up with the demands in the market?
Yeah, we didn't touch a lot on security, but that almost always comes up in these type of sessions. Oh, go ahead.
physical branch of a bank, right? Now banks have, oh, you want to open an account, just go online. You just go online, you open an account online, and then you have all these neobanks that are sponsored by who knows what bank is sponsoring all of those, a lot of them from Evolve, I think. And so we do merchant accounts at my company, so we see tons of fraud bank accounts from all these bank accounts being opened up online. And there's like, I opened one up just to see with the whole fake name and everything. I didn't even have to put any money in. I sent them like $1. They opened up a fake bank account. So what are banks going to do to combat that with all this, this online, open your bank account online thing? And especially like it's a lot of businesses, not personal accounts.
Yeah.
Maybe some personal, but a lot of businesses.
Yeah, so I think you see some of those larger banks. We have teams. We have a giant cybersecurity team at our bank. It's one of the biggest in the U.S. And there's 600 or 700 employees just in this one group in one office working through those to make sure that they're looking at trends, looking at security, using AI. And when you open accounts, looking for things that are codes and words and terms, and then running it through all of our compliance controls and systems. And we have a lot at our bank. I won't get into all of them, but there's a ton of different AML checks, KYC checks, keyword checks, all of those things that would stop an account from being open. But as far as the other banks in the market, I don't want to speak too much of what they're doing, but that is something we look at when you think about our bank trying to keep our clients safe and secure. We're aligning within the bank on what our risk appetite is. We make sure that we understand each other's groups. We make sure we have the proper controls and checks in place before we put some payment in the marketplace. And that just comes with being a really large, highly regulated bank.
Yeah, there's a balance between making it easy to someone open a bank account and not making it too easy. And so that's why we talked about virtual accounts and why that's so important, because a virtual account can only be opened under an existing, what we're calling a physical DDA. So all the KYC checks have already been done. It's under the same tax ID. It's under the same name. And so we don't want to make it too easy for businesses to open a bank account, but we also want to keep in mind that we need to keep the digital and frictionless expectations in mind. So it's a balance, right? I mean, and you're going to see a spectrum in the industry as well.
I just see like a ton of younger people, they go to these online, just like you're talking about, buying a car online. I guarantee that the age of the people doing that is on the younger side.
As somebody who's older, I've done things like that too. I just pointed out. But I guess I'd say I think it's more about the everyone wants to be quick and frictionless in experience, and I think our job is to safeguard our clients as well. So we're trying to do all that along with safeguarding our clients. I think that ties into. Oh, go ahead.
Yeah, what is your thought on the blockchain as a payment processing or maybe as a security?
Yeah, so we have teams working through it. We actually have a group that gives a blockchain update to us every month. I think there's some real good use cases for it from a security, transition of origination standpoint. I could see use cases in all different kinds of industries, right? Like think about a lien holder. And even for our clients I talk to, I see them using it. They know where the source of goods came from. So I'd say this, like those type of solutions like blockchain, AI, we have entire teams in the bank working on it. I don't want to speak out of turn on some of the stuff they've done, but it continues to evolve. I've seen them using it for transmitting information within our bank currently. Maybe not to exchange money, but to exchange information. Does that make sense? And I think it's like everything. We're going to have teams working on it. They're going to pilot it, figure out where it fits in, socialize that through our bank, and then make sure it makes fit for our customer. And then we have all those compliance teams and stuff we talked about that weigh in on those solutions.
Hey, Ken. One distinction I think you need to draw is you can make things go faster and easier and simpler, but the regulations and the law behind that are really important. And the reason checks are still around is because check law is really, really good, and it's really good for business. And so as you get into some of these RTP and Zelle, which are more consumer-based, right, the regs behind those are not as good, for business, even though it's good funds,
Yeah, I think it's interesting. So for So is a kind of statement that, the traditional rails like checks, ACH, those, they're secure and there's a reason they're still here. We're used to them. And then some of the newer rails you're saying that are maybe a little bit more challenging to adopt because they're newer and we're not sure about security of them, right?
Well, not necessarily security, but the law behind them, Reg E versus Reg CC versus UCC, right? And availability of funds and being able to dispute a transaction 60 days after it's done that's not great for merchants, right?
Yeah. Yep.
Where, RTP is more good funds, and then check, is not disputable unless it's fraud, so.
Yeah, I think I'd say some of that depends on the client processes and it depends on the client industry, right? So but that's a really good point. Depending on industry, there's certain things to think about using some of the newer payments. I think clients like, Venmo's been around forever, right? And Zelle just overtook it as one of the most common payment types. I think about that as, Zelle's a secure solution run through banks we just talked about all the regulations we have and all the things we do to keep our clients safe. So when I see Zelle, I see RTP, our clients feel pretty good about that. Now what happens is they have to learn how to use that. So we talked about a consolidated payables file before. We had the first consolidated Zelle payables file here, I can't remember how many years ago now, maybe 7, 8 years or maybe 5 or 6 years, but we had that down in the Southeast. And so that's something clients see where they start to use it and they start to figure out how to use it. And like I said, I feel Zelle now is a little bit, everyone's getting used to that. RTP, I feel like for the most part people are using it and now they're starting to at least pilot it, especially with the limits going up to $1 million. So.
Yeah, and the one thing I would mention is we keep talking about all of what you guys end up seeing at the end of the day, but as a bank, we're constantly innovating. We have innovation teams. I used to work at the Technology Innovation Lab at the bank, and we're constantly trying out all those things. You just see kind of what's bulletproof at the end of the day, right? What's really worked, and going back to the blockchain conversation and crypto. We're thinking about all those things, but at the end of the day, we have all the regulations. We're a highly regulated environment, and we're only putting out what in the marketplace is what's going to protect us and our clients at the end of the day. So. And I
think the key is if you're a company and you're not looking at those, then your competition might be, and they might have an advantage. So if you're sending an ACH payment or check payment, and they're able to send a real-time payment 24/7, 365, and they can do some of the things that we talked about with Driveway or some other companies we've worked with, that's a competitive advantage for them. Think about a carrier who can settle via Zelle now on the weekends, or settle via Zelle now to their consumers. That's a big. Those are big advantages that they have just from a phone number and an email perspective. So, but good points. And I think what your point might have been as well is, so some of the newer stuff like cryptocurrency and that, we're not just going to jump in right away, right? We're going to experiment, we're going to test it, we're working with really specific clients, and then we do have to have all those controls in place that we're expected to have.
Can you comment on money movement going across borders and how you see that changing?
Yeah, that's a loaded question because so I'd say this, you probably want a bank that has different connections in different markets, right? We've always had foreign currency accounts, multi-currency accounts, some banks call them. So that's just the way to settle. I've seen companies start their own intrabank. So really large companies I've worked with have now they have their intrabank companies in different countries. I think what you have to think about there is what's the risk in your company if you're doing that? So are you doing business in that company, in that country? Does it give you a competitive advantage to bid in that foreign currency? So if I'm going to bid in something in the United States, I want to be able to say US dollars. I don't want to say I'm going to bid in peso or pound or sterling or something where they have to figure out that conversion rate. I want them to know what my bid is in. Or maybe you offer both of them. So that's, does it give you a competitive advantage to do it? Why are you working in all those countries? And then I also think about, I had a scenario, this was back, trying to think of the year, but when Europe went to a negative interest rate, and we had clients with millions of dollars of exposure in Europe, all of a sudden their balances are negative, right? So then they have to move that money out quickly, and then the value of those currencies drop too, so they have that repatriation risk. So if you're going to operate in a country long term, I think it's a really good strategy to have. I think the interbank company, the interbank process that some companies have built, if you're a really large organization, that's something that I see people getting leverage out of. But that is a loaded question of there's all these different options that are coming out in the market, and I think we'll just continue to see that evolve. Does that answer it?
It is, there's a lot of friction in it, right?
There can be, yeah, exactly. Like I said, you want to work with a partner who can help eliminate those counterparties and all the touches in it. And depending on what you're trying to accomplish, depending on what you're trying to accomplish, that'll determine the partner you work with, is what I would say. And that's where I think the cryptocurrency questions come up, because it does get rid of the borders and things. I get that. But again, I think the banks will be slower to adopt. Like, what if you were doing business in China and they just said it's illegal, you know? So then all of a sudden our clients stuck with that risk, and that's not a spot we want our clients to be in. Go ahead. Sorry. Go ahead.
I'm just curious from a bank's perspective with faster payments on the merchant acquiring side, and we have the options that our sponsor bank has. And so we see sponsor banks that are running toward faster payments, and we see kind of like, whoa, wait, is it a risk thing? Is it a heavy lift for them? Is it a big implementation? From the bank's perspective to adopt these, what would keep them from plugging into these rails?
So your question is on the merchant acquiring side, what would stop a bank from adding in faster payment rails like real-time payments? Yeah. So I'd say this, like, we've been thinking about it for a while. Sarah's here. She actually built some solutions for our teams within the bank. So the bank, what we see in the real-time payment space is, the top banks have kind of figured it out already, right? We've been doing it for a while for the most part. And like I said, we've been thinking about it for a while, so we've added in processes and solutions. We've seen some challenges at some banks where they can't process payments as easily as we can. And then really for us, like, we've connected those to our platform. So we do agree that, like, you should have a real-time payment. But I know Peter's been working on it too, so I'll let him, he's behind you. I know he wants to say something about it.
Hi. So what you should do is you should move your processing to Elevon, because we do real-time payments. We have 40,000 customers doing it today, 7 days a week, 365. And yeah, it was a heavy lift. And any banks who want to do it, or any processors who want to do it, you can come work with us. We have a program in place to do it with other processors. We have a pipeline we're building with other merchant processors. And Elevon's the first. And Sarah, who's in the red shirt up front, she's the expert. She actually really did it. I just talk about it, but she implemented it, and it's a heavy lift. But the risk is significantly reduced, because instead of doing ACH or internal or wires, we're doing RTP, and it's very successful. And we have some bumps and bruises, but we've worked it out. And I would say why other banks aren't doing it, it's a pretty big investment that we made, because back to what Ken said about the core systems, merchant processors have core systems too. And so to get those core systems to talk to real-time payment rails is a heavy lift. And that's really where the rub is. So we've invested ahead of the curve, and happy to, get you real time.
Yeah, and Peter, I guess that's what I wasn't going to get that into that level of detail, but I think it's just the point that we've been thinking about it for a while, right? So that's just one example of where we thought about it. We've made a commitment to it. We see this as one of the futures of banking, obviously, is the new payment rails. So we really pushed to be the first one to send a real-time payment, and then we really pushed to have some of these solutions. But really good question, because it isn't the same for every bank and every partner, and not every bank's going to be the right fit for everybody, right? Sometimes we might not be, might be another bank. It just depends what your needs are and what you're trying to accomplish. And that's where I think you want a partner that really wants to understand what you want to accomplish, and you guys are a good fit together, to work together from a risk and production standpoint. So, but really good question, thanks. All right, we got, I think, time for one or two more, but go ahead, you were waiting, sorry.
What do you see as the biggest hurdles in this evolution toward the new payment system?
That's a great question.
Yeah, so the question is, what are the biggest hurdles in the payment system? Again, that could be, we could probably talk about that for hours, right? I guess I'd say this, I think we see the change happening. We know some of these solutions have been in place in the marketplace, maybe not in the United States, but in other markets for years. So I think it's up to us to make sure the United States is staying up to date, adopting these, and driving the right change. I really do worry about fraud and security and risk that clients take. I just met with a couple of clients. We had a little panel, and they talked about best practices for mitigating risk and fraud and security. And they're terrified of a hostile takeover, and we've seen that in our client base. So, you can control what you can control, but if an employee clicks the wrong button, that really creates risk. And, so I always think, like, just make sure you have the right controls, make sure you're training your employees. All the stuff that you use for your other payment types, those controls still work, right? Like making sure that your back office has separation of duties so that I can't go in and put in, my routing and account number on one of your clients' routing and account numbers and you wire me $1 million or send me a real-time payment with that. So making sure those controls are in place, dual controls. But again, I think that securities, if you ask me what keeps me up at night or my clients, I think it is the security of everything in the world today.
Yeah, and add one more thing to that, IT resources. I mean, if you don't have a low to no code solution that takes very minimal IT resources, I don't think there's one person in here who's struggling to get IT resources in their company. I would say that's one of the biggest struggles to adopt the new technology. Their mindset has shifted, they're ready to do it, the staff is on board, and they're in line, they're 33 in line to their IT department to get anything changed.
Go ahead.
I'm sorry, I haven't responded.
Good. I knew Travis. Go ahead, Travis.
I kind of disagree.
Okay.
With the last comment.
Okay.
It was more of a convergence of, so you have a bank that is by nature risk mitigating, to answer your question. And then the market has got their own mission. And they don't always understand the perspective of the bank and why they have this understanding. I heard you comment about crypto. Yeah, but it does this, it does this. That's all well, but that does not what compliance people at a bank look at and understand and what they have to manage as their job and their role. And so where that comes together is where the rub is. Technology, I could stand up an RTP payment this afternoon. That's not the problem. It's the understanding and appreciation of what the market needs and the banks converging into. So banks are moving into BAS and other types of things that they can manage and block and tackle the risk associated with that. And now it takes the fintechs and the merchants to meet that.
And Travis, I guess that's what I was thinking, right? Like the risk and compliance part to me, like the safety and security, the more that happens, the more we have to pull back controls and regulate. And the more we do that, the harder it is to do business. So when I think of the obstacles, it's almost kind of what you said, right? We're trying to join these groups together, and if there's one issue, then it slows everything down tremendously. And that could be a huge hiccup in the market.
What you mentioned is something that, fintechs and businesses don't really understand. Dual separation of roles and responsibilities, those are the individual functionalities and things you need to have in place.
It is.
The bank feels that, you should know this.
And we'll cover that in a later session, so you teed us up very nicely. So I appreciate it. But again, I know we're getting out of time. I see some people waving. So again, I really appreciate the conversation. I thought this was really good, and hopefully you have a great session and a great way to start the day.
Yeah. All right. Thank you.
All right, with that, I know we have a little break, and thanks again.